What's going on, everyone? Welcome back to the Sartorial Wealth channel. It's time for your November financial recap, where we break down the biggest economic and market stories of the month. Now, from interest rate decisions to stock market highs and of course everything in between. So let's dive in. Okay, now to start off, the U.S. Federal Reserve captured its attention by cutting its benchmark interest rate by 0.25%, bringing it down to the range of 4.5% to 4.75%. Now, this marks a second rate cut in 2024, reflecting easing of inflation and a softening labor market conditions. Now, despite low unemployment, the job market is showing signs of cooling, with risks to inflation and employment remaining roughly in balance. Core inflation, which excludes food and energy, stayed steady at 2.6%, inching closer to the Fed's 2% target. Meanwhile, the economy expanded at a solid 2.8% pace in the third quarter. Now, though there's some uncertainty around President-elect Donald Trump's proposed policies, such as tariffs and of course immigration reforms, Fed Chair Jerome Powell reassured the markets by emphasizing the Fed's independence and its focus on stable inflation and of course employment. Now, across the border in Canada, we saw slower economic growth, with GDP rising only 1% in the third quarter, below the Bank of Canada's 1.5% projection. Now, with inflation at 2% in October, the Bank of Canada faces challenges with balancing momentum and inflation management. Now, over to the stock markets. November posed to be a stellar month for pretty much all stocks, with all major indices delivering strong positive returns. Now, the S&P 500 posted a 5.7% gain, its best month in a year, while the Dow Jones surged 7.5% to hit record highs. Now, the Nasdaq followed closely at 6.21% and is showing strong performance since May. Now, the top performers include Palantir, which rocketed over 61%, Tesla, which is up about 38%. Meanwhile, small cap stocks also made waves, with the Russell 2000 index outperforming major indices up 10.8%. As tech-driven momentum cooled, sectors like financials, consumer discretionary, utilities gained traction, reflecting broader investor diversification strategies. Now, over to the housing market. Affordability challenges continue to dominate the U.S. market, with 30-year mortgage rate remains high at 6.5%, with only minimal declines projected through 2026. Now, home prices, already at 50% higher than pre-pandemic levels, are expected to rise another 3.2% in 2025, outpacing rent growth. These trends are pricing out many first-time buyers, with the median age of home buyers now at 49 years old. As affordability improves only gradually, patience might be key for any prospective buyer trying to navigate this, of course, tough market. Now, shifting things over to gold, a market that really keeps investors on their toes, gold prices held strong at $2,600 per ounce despite heightened volatility. The Federal Reserve's decision to pause further rate cuts has reinforced gold's appeal as a hedge, especially amid ongoing inflation pressures, with core inflation at 2.8%. Geopolitical uncertainty, including President-elect Donald Trump's trade policies and potential tariffs, has of course further boosted demand for gold as a safe haven asset. Now, analysts remain optimistic, with forecasts really that gold could hit $3,000 per ounce by 2025. Of course, for investors, this volatility presents buying opportunities, particularly when those with a long-term perspective. Now, finally, let's talk about U.S. policy under President-elect Donald Trump. Now, Trump's recently threatened 100% tariffs on BRICS nations, Brazil, Russia, India, China, and of course South Africa, if they use a currency to replace the U.S. dollar in global trade. Now, this move tightens Trump's broader strategy of leveraging tariffs in trade negotiations. Now, while this approach, described as escalate to de-escalate, is seen as a tactic to prompt action, economists warn that such measures could disrupt global trade and increase inflationary risks for everyone. Now, as geopolitical risks rise, diversification remains crucial in managing portfolio volatility. All right, now that wraps up November's financial recap. Remember, these insights are designed for educational purposes only and are not meant to be specific investment advice. Always consider your unique financial position and consult with a professional before making any financial decisions. If you found this recap helpful, please hit the like button and subscribe for more updates. Until next time, please stay safe out there. Bye for now.